Nothing we say is investment advice. Please pause on all 3 pages of this disclaimer and read it.
Greetings, Algo Artisans Cowboy here. It is 8:32 a.m. EST. Good morning, SG, CS4NIN. We have a guest here on the show, or a guest. We have a viewer here who likes to show up, ask for charts, and we're here to help you out. Algo Factory, right? What do we do at Algo Factory? We build algos. We teach people how to do so. And as a matter of fact, there is a free algo in the description. Check it out. In the meantime, Bitcoin is the big story, right? Well, it's among the big stories. It's rushing up. Let's see what percentage Bitcoin is up in the last 24 hours or so. Give me just a moment. Let me see. This started Wednesday. This will do. Since the move started, it's up 12%. Yeah, that's a big move. The way I'm looking at Bitcoin right now is if Bitcoin can stay above 78,000 for like 2 weeks, then we have a good chance at seeing an earnest rally, right? So the world's changing, is changing quickly, but the question is it changing quickly enough to actually cause a major change in what's going on with Bitcoin? Because Bitcoin's done the same thing for 3 halvings in a row, right? So basically, all the halvings going back, with maybe the exception of the first one, Bitcoin makes a new high, and it's thousands of percent or hundreds of percent higher than it was before, and then it retraces 75 to 85%. Now, if Bitcoin did the same thing this time that it's done the prior halvings, then we're looking at a move below 30,000 in like October or November. That's what we're looking at. Okay, so the question is this move an honest change in the financial world, in what Bitcoin is? Is it finally decoupling from the stock market, which is interesting that I did a video on Tuesday morning before all of this, asking if Bitcoin was decoupling, right? Or was it yesterday? Whenever the video was, I did it before this big move, which is kind of funny because we didn't know that we were going to get the news that would cause this move up. And the news happened to be the US basically adopting some policies economically that are showing real strains in the debt market, right? So without getting into the theory, without talking too much about why the debt market is having a major issue and why Bitcoin is moving up as a response to that, let's take a look at what I predicted. And I did predict a move up. There was some bullishness in the charts. The high time frame had some bullishness. It wasn't a lot of bullishness, but it was high time frame bullishness. So the way this works, it's like a giant lever, but you can tug that lever pretty lightly on the high time frame and it'll cause a big move, right? But that lever is really hard to tug. So basically it was ready to be tugged. It was in a position where, okay, we can tug that lever and, you know, price could shoot up a fair amount. And that's exactly what happened when that news came out. Now, the conditions were there for that move. If you look at the weekly chart and the algos, the conditions were there for a possible strong move up. But if we zoom out to that high time frame, and I'll probably take a look at a different chart because this has all my gobbledygook on it. So let's go to like Bitcoin, maybe on Coinbase. This is what we're looking at, the move down from the top. And the top was at 126,000. This was back in October, mid-October, early October. Price is heading down. You get a big move up. You get a big move up. And then you get a big move up on the way down, right? So let's take a look here. We have the first move up was a 22% move up on the way down. The next move up on the way down was a 39% move up on the way down. The current move up is so far 24%. So we're not even at this spot here, this last move up that started in February, moving up to this level here at the top. to 83. We're not even, we're a little more than halfway there, right? So yes, this is a significant move, and what makes it more significant is it's a single bar mostly, with the exception of the kind of the lead up to it. A lot of this move, like at least half of it, is just one single weekly candle, that's big. That's a huge move. Now, usually these big weekly candles, when you're in this part of the market, when the market is headed down already, they get eaten up pretty quick. So under normal conditions, a move like this would usually get eaten up pretty quick. It would sell off, and then maybe it would go up or not and eventually make its way back down, right? That's normal conditions. And so are we in normal conditions? What's going on in the debt market? And V the Gorilla, I believe, is going to be here shortly to talk maybe a little bit about that, is that right now yields are high. And what does that mean? Well, the way that money works in the United States is that we raise money by selling debt. We raise money by selling a promise to pay in the future. And that promise to pay, there is an interest rate, coupon that somebody gets for holding that debt. So they purchase the debt and then they get a rate. And the more attractive the debt is, the lower the rate has to be to attract people purchasing the debt. So for example, if somebody can very easily get like maybe 7% in the market, like easily get it, would getting 3% by holding a bond be very attractive? Maybe. It's like a sure 3% though. You don't have to think about it, right? If you just forget about interest, like forget about inflation, things like that. You don't forget about interest. You just, if inflation aside, let's say you could get like a net 2% after inflation from a bond without thinking about it. You're just going to buy it. You know that after inflation, you get 2%. Well, that's pretty, if it's super secure and you don't have to think about it, it's extremely low risk. People will go for that. Because inflation's, officially around 3%. So if you're getting like 5% coupon, then you're making a net 2%. And it's like, I don't even have to think about it. Like my money keeps up with inflation. I even make a little, and it's like the United States debt, they're going to pay it for sure. It's very attractive. Well, what's going on now is that the debt is not being trusted like it used to, because we now have a $40 trillion national debt. And we have something like $200 trillion in estimated unfunded liabilities. That's on the high side. Some people will tell you it's closer to 100. I think it's probably worse than we'll ever know. So the world's looking at the United States and saying, are they going to be able to service that debt? For all these people who hold US debt, are they going to be able to pay for it? And right now, we're paying more, or at least around the same, to service our debt every year as we are to fund our military. And that's interest only. That's only paying the interest on the debt. That's not paying down any of our debt. So we're putting, we're adding, first of all, $1 trillion a quarter to our debt at $40 trillion. So we're adding something like 10% compounded annually. It's actually 1% quarterly compounded, which I'm sorry, it's 1 trillion quarterly compounded, which is more than 10% per year at the current debt level at 40 trillion. So you must understand that's way more than our GDP, right? I mean, our tax receipts between our deficit spending is so out of control, nobody trusts our debt. Let's just leave it at that. I don't want to start getting too into the math and bore everybody watching the show. When nobody trusts it, at that point, you have to increase the yield. You have to increase the percentage that you're going to pay the holders. But what that does is that makes it even harder to service that debt. It makes it harder to actually pay that coupon. And everybody's going to start wondering, like, do they even have the money to pay for it? Well, what they started doing yesterday was showing signs of strain. And they're starting to do what the Europeans are doing, and it's called yield curve, it's called yield curve control, where they start to sell near-term debt to buy the long-term debt to hold down the yield. And that's like getting very into like the bond market. It gets a little convoluted, but what it basically means is that in order to keep the yields down, they got to play games. And basically the treasury has to purchase, the treasury has to use debt to buy debt. This is like using credit cards to pay your mortgage. It's a very bad thing. It doesn't work long term. It's a sign of a spiraling problem. And the only thing that's going to change or save us in theory is going to be like AI or something, some invention that creates productivity. And this is the problem, is that our productivity has not increased. As we've become a financial nation, we're not really increasing the way that we build things, the way we make things, the things that we sell. We're not increasing things that as a nation we can actually sell, right? If we were, we wouldn't need to do all this stuff. If we were doing that, we would need to do that. And the other problem is we're not cutting our spending. We continue to spend on things that make increasingly no sense. So all of that to say, the Bitcoiners got that news and bought really hard. And the question is this going to be a short squeeze? So what would happen, in my opinion, on Bitcoin is that if Bitcoin can stay above, I said 78,000, and I probably should restate that. If Bitcoin can stay above 83,000 for 2 weeks, then that means we may be in a legitimate rally. Give me 1 second. We got some messages here. Yep. So if it can stay above 83,000 for 2 weeks, then we're actually possibly, and that's possibly in a true rally. What may end up happening though is this may end up being a short squeeze, because the people that run the game understand the Bitcoiners are like, oh, the debt system is ending, everybody buy Bitcoin. And then in reality, the players might know that price is possibly going down below 30,000. And so it might be that a lot of people who are holding Bitcoin, who need to exit their positions, who are underwater, are going to take advantage of this news. And as price continues up and people panic in, they may actually be selling. And what we might be seeing is a short squeeze. So a lot of people are short. They squeeze price up to get the buyers to panic in and wreck the shorts. And then once we get into this area here, all of a sudden we see price go down, because all of a sudden the longs get excited and then the longs get squeezed out. The thing about Bitcoin traders and buyers is the retail types tend not to be very sophisticated, right? They tend to be like believers and, moon boys, and it's fine. And they might be right, but I think that they're going to be correct long term. There's always that possibility though that they are correct short term, and that this becomes a legitimate rally and we see new highs. It's possible. It's not typical, but the Bitcoin market is pretty new. And so sure, we have data that goes back several years on Bitcoin and how it usually behaves. But as a brand new market, 3 data points is not that strong of a thesis. So we do have to make room for the fact that, yeah, sure, maybe this was the bottom, right? Maybe this, 57,000 was the bottom and we get a V-shaped recovery. I don't think that's going to happen. I could be wrong. We only have the data on which we can rely. That's all we have. And when you have the whole world thinking one thing is going to happen, then my instinct is to look the other way. And the entire Bitcoin world right now thinks that we're going to see a V-shaped recovery. Not the entire world, but a lot of people are saying it, which tells me, okay, might be time to worry about a bull trap. And that's why I did a show, I think it was Tuesday or last week or something, called a question mark Bitcoin bull trap. And then, is this an earnest rally? My instincts told me to look at Bitcoin before all this happened, or maybe it's just pure luck, but that is what that is. So to make it really simple for everybody, in my opinion, if Bitcoin stays above 83,000, if first of all, it's got to make it there, right? And it's got to do it kind of soon, like way sooner than what I just drew. So if in the next couple weeks, Bitcoin makes it above 83 and stays above there for a couple weeks and is showing certain signs in the algos, then I will be like, okay, maybe we're seeing an earnest rally. Until that time, I would not be too impressed with this move up. I mean, I'm impressed, but I mean, just look at it, zoom out. It's really not that big of a deal. We have seen comparable moves up twice already since the all-time high. Right now, we're not in terribly new territory. The only thing that makes this unique is this one candle, and that candle could get eaten up in the next several days, and it might look just like a lot of these candles that we've already seen, right? It might be that in a week, you see exactly this right here. This can easily turn into that in 2 weeks. So, cautionary tale. Dan, I'm sorry, SG CS4NN has a question, wants to see DAN. We'll spend a little more time here on the public live lab today and do that. Let's look at DAN. Dana Incorporated. What kind of stock is this? If you don't mind letting me know what type of company this is. I'm imagining it's tech. It's, high time frame, right? High time frame. The way I would look at this is either like it's starting to meet resistance. So high time frame, you're either going to see it start to make a range up here, possibly. It's auto parts. Okay. Is it like a US auto part company? Like, what's the specialty? What's the, that's a question. But what we might see, it's manufacturer. Yeah. Is it US based? Is it aftermarket parts? Do they supply OEM? Like would be, maybe interesting to know that. Either way though, I think that at this moment, it's probably going to come up and see its highs again. It might take a few weeks, but it's reaching, some concerning sort of resistances up on the daily time frame, and it's getting tired on the weekly. So in order for this to continue and break past its all-time high in any meaningful way, it's going to need some kind of a fundamental push. There's got to be some big change in the company itself. Either that, or it's just got to be way more bullish than is visible by the charts. Like there's got to be something about this company to take it past this level in any meaningful way. So if I were, I'm not an investor. I don't play stocks long term. I have concerns about what might happen in the stock market because of things like we're seeing in the bond market. So if it were me, and I just wouldn't do this. I wouldn't touch this because I don't touch stocks. But if I did, I would be out before the next all-time high area. I'd be out before 39. Yeah, Mick, we'll do all that in the private live lab. We're getting a little long in the tooth on the public live lab. V the Gorilla, how you doing, sir?
Who said that? Oh, it was you.
Oh, yeah, man. It's it is me, sir. I don't know. Do we want to just make this like a public live lab for the whole show and treat everybody?
Sure.
Yeah, we got both of us are here. We both got fresh fades. You're chewing on bananas, I can see. How's that banana? Are you chewing your gum? Yeah. Let's see you blow that massive bubble.
It's the best gum in the world.
Yeah, I used to, dude. That cup that you made is meant to go in like your in your car cup holder.
Yeah, I know. I keep it on my desk and I just eat it. I just eat it, man.
Chewing cud, man.
I love it. It's a great gum. I recommend it. The texture is fantastic. The flavor is unbelievable. It's so good. This is called mint crystal.
Nice. Yeah, brought to you by.
They also have their lemon and their fruit punch, which is excellent.
Nice. Yeah, I don't mess with bubble gums. Too many artificial flavors.
Yeah, you're missing out, man.
Nah, I'll miss out. I'm good. Let's drink my coffee, man. Drink my coffee. Fucking, I used to use bubblegum all the time, but I don't know, bro. We got this. I've talked enough because we've been on for about 20 minutes now. I've talked enough about what's going on with the bond yields. I want to go back to Bitcoin a bit because everybody thinks Bitcoin's going to go to the moon now. So this is the way I put it. If Bitcoin goes above 83,000 very soon and stays above that for minimally 2 weeks, then we might have a decent chance of an honest rally. But until I see something like that, this looks like a bull trap to me. They're just getting.
It is a bull trap.
Yeah, it's just so they're first of all, this is my take on this business with the bonds and 40 trillion. We all knew 40 trillion was coming for the deficit, right? And a lot of the doomers are continuing to talk about it. And so, of course, you have a huge contingent in the crypto market who, they're looking for that. So it's just a natural time to get everybody to buy into a lot of things, precious metals, cryptocurrency. And what the people in the financial world need to make money is what, V? Your big players. What do the big players need to make money?
Yield.
That's right. So they're chasing yield, right?
They're chasing yield because yield leads to what? Cash. Institutions are not getting in Bitcoin because they love Bitcoin. They love crypto. They believe that one day they're going to solve world hunger and solve all the problems of the world with Bitcoin. They don't give a rat's rear end about Bitcoin. Bitcoin's a very thinly traded market. It's not that big. It really isn't. Okay. And it's not very liquid either. But it's a great place, especially for institutions to come in, trade it up, get some yield, take some cash, and put it into investments they actually want. So that's what it is. It's like, I don't know, man. I mean, Bitcoin is Tina Turner, and the institutions are Ike.
Fudge.
That's what it is.
I met Ike Turner.
Yeah, I heard he was a nice guy.
I'll tell you the story. It's a funny story, but tell me more about the institution. We'll come back to Ike.
Yeah, so that's basically what it is. It's like all these guys that are in crypto, and they listen to these insular echo chambers on various crypto social media networks and crypto channels and this, that, and the other. And they're like, "This is it." All the institutions don't give a fuck about crypto. Crypto is they've moved beyond crypto, and the hottest chick in the room right now is AI and all the stable coins and whatnot that's going to enumerate from this whole entire AI thing. That's what they're into right now. They're into yield. Okay, Bitcoin sucks. I'm going to be honest with you from an institutional standpoint. How would I know? Because I've seen it. I've seen 9-figure deals, right? And I've seen it takes a day, 2 days for a trade to settle. It's just stupid. It's clunky. But institutions are playing it because why? They chase the yield. Because unlike these crypto social media networks and channels, institutions are pragmatic. They don't care. They're not in love with an asset. They're in love with money. Okay, that's what they're in love with. So whatever can get them ultimately to what they want, which is the dollar bill, not Bitcoin, that's what they're going to be chasing. Cowboy.
Yeah, no, with you 100%. Now, does it mean Bitcoin is, not going to go up all the way? Does it mean that we're not going to see it make new? No, it doesn't mean that. But look, here's the thing about it. And this is what I said earlier before you came on. Everybody in the Bitcoin community, not everybody, but all the pundits. Oh, this is the beginning. They're doing yield curve control, and they're gonna, the bond market is breaking, and Bitcoin is now going to be the moon, and it's going to be everything. And okay, perfect. Get ready to sell. As soon as all those people start talking like that, there's a really good chance that they're getting retail to fill their short positions. They being the institutions. The institutions are exciting the regular guy who thinks that it's still 2017 to buy Bitcoin, and they are taking profit because they probably, and this is all just what we think, and V and I have come to this conclusion separately for different reasons, which means that's really even more probable that Bitcoin will probably go much lower in the near term. And so what they're doing is they're using this move up to exit like underwater positions and to fill shorts.
That's it. That's all it is.
That's all we think. And I would not be surprised to see this move go all the way up to this 82,000 and even poke above it very briefly. Like, I know we've already covered this, but I don't want to say who you talk to because, you know, there's some things we don't talk about, but I will say that the individuals who you speak with in that particular area that you go to very often, did you do that thing? Did you get that thing done, V? Did you do the thing?
I do the thing, bro.
Is it done? Is it finished?
It's finished.
All right, good.
Take it easy, Joey Boombox.
You took care of that thing? All right, good. So long story short, I think we'll see like maybe at the best, at the most bullish, a strong move up and then a panic right here above 83, and then like just a nasty dump down. That is the most bullish possible scenario in my mind right now for Bitcoin. So I just wanted to make sure you're seeing the same thing because obviously you have, I mean, look, I'm a chart guy. V is actually boots on the ground. V talks to people. It's no secret you do very large deals around the world with, you know, crypto, precious metals. So for somebody who has boots on the ground that I don't have, you know, I always value that. So
and we compare notes, man. And when you have Nick's technicals and my, like, you know, my intel and what's happening on the institutional side of things, you have a very strong picture of where the entire market's going. And that's why we've called it, you know, weeks, months, a year in advance where the whole thing is going to go. You know, because why? Because Nick and I, we're not married to an asset. There's not a single asset out there that him and I are married to. We are, at the end of the day, we too, just like the institutions, are chasing what? Dollars. Why? Yep. Because dollars is what pays our bills.
Pays our bill and allows us to buy hard assets.
Yeah, that's exactly correct. It pays our bills and allows us to buy hard assets. That's why we chase it.
Yep.
So,
yep, the dollar still reigns. Yeah, okay, you know, the dollar is getting weaker and less than that. Yeah, but guess what? Okay, go try to buy a house with your Bitcoin. I'm sure you can. Don't get me wrong. Like there's ways to do that. It just adds another layer of complexity, right? It's getting better. Let's take a look at this. So I got a request from Miko, who wants me to take a look at XOP. This is an oil and gas exploration on the daily. Interesting. Okay, so oil and gas going up. Look, we have all this business. We have concerns about the what do you call that? The strategic oil reserve going down, and maybe that's all, you know, hype or not. I don't know. But oil, I don't think, I mean, oil continues to be very important. And I'm looking at the high time frame algos right now. So I can tell you that this particular company looks rather bullish. It's State Street SPDR S&P Oil and Gas Exploration and Production ETF, right? So it's actually an ETF. So this, and it's a State Street ETF, right? So it's like oil exploration in general. I'm meaning to, or whatever I'm gathering. So Mick has a medium-term play. He wants to know what's happening medium-term, which when I hear medium-term, I think maybe this quarter or next, right? So I can tell you it's bullish. And this is exactly how I would handle this, right? So this is almost like textbook. You have a strong move up starting in 2026, right at the beginning of the year. That move up ended in March. You have sell in May and go away. Well, not, you know, if you sold in May, that was great. But if you bought back again in June and due to Hormuz and et cetera, you're doing great. So if we do a Fibonacci extension on this, it went literally to the 618. I mean, this is, I could tell just, you know, I've done this enough. I knew it would be 618, but this is almost exactly to the 618. Now, typically, like if you look back, it didn't have to go that deep, right? But it went to the 618. There's plenty of liquidity back here to make this go back up. So the question is this going to extend farther? The problem we have is that it's right at the all-time high. So you have the all-time high back in April. It's right there now, right? And it wants to break out, it seems. I can tell you the algos are strong. So I would look for that breakout. The ideal scenario would be a move above that breakout, which is right where it's at right now, basically. I wouldn't get it yet, right? I would look for a move above. Ideally, a pullback might be super low time frame, or even just a little bit more of a risky way to do it is just buy the breakout. But of course, you leave yourself at risk of having it head back below and all that, and then you're stuck in it for a while, or you have to cut your losses. But ideally, a breakout, a pullback, and I would be using my algos to, help to sort of look at, okay, is this going to continue, blah, blah, blah. And the play for me would look something along these lines. And I would be out by 229. 230 is a nice round number, so I'd be out by 229. Look, conservatively, a nice 2-to-1 with a stop loss down at like maybe 179, so just below 180, another nice round number. One could even take a second bet with a bit less money if there is a pullback, and then just buy right after that pullback with a tight stop based on that pullback. And then you're having like a 5 or 6 to 1 risk to reward ratio. So you're using, a fraction of the money you would on a larger position. But conservatively, this is what that trade would look like for me. Just like that. So, entry, breakout, pullback, entry, it could be tighter entry. We'll see. And then you have a stop. I would have a stop below 180 and take profit just below 230. That's how I'd play that. So that's the plan. That's how I would do that. And I think it's a good, you're certainly welcome, Miko, no problem. I think it's a good play based on what's going on with oil and gas right now. And I think we'll just make this a public live lab because, V, you're here, which you're here pretty often for the private live lab, but, to have you here in the public, everybody's going to enjoy that. Look, we have Hormuz, we have all the stuff, the war's on, the war's off, the war's on, the war's off. And I know you shared some stuff last week that we cannot share publicly as far as all of that is concerned.
Right.
But do you think we're going to end up with, like in the near term with oil and gas going above like 200? I mean, is this going to spiral out of control?
No, it's not going to spiral out of control. I think they will pull this back. There's just there's no way around it. I think what's going to happen is that the Trump administration, which has the Americans, we have our own blockade, south of where the Iranians have their blockade. It's like a secondary blockade. It's weird. It's a blockade to a blockade. We will leave that blockade, leave the Middle East, declare victory. But when we do, we will be on the economic precipice. And barring any unforeseen events, things could always go sideways. Nobody could predict this stuff. But right now, the pressure is on the administration to end this because there's a no-win scenario. Also, the pressure is on to throw the Zionists under the bus, so to speak. How this will translate, I'm not exactly sure. But you can rest assured that the damage that has been done to the U.S. in terms of its reputation, in terms of its outlook, its how the world sees us as the market to invest in. Yeah, that's taking a major hit. That's taking an irreparable hit. What this entire escapade has done, what the Trump administration has done, is permanently ruin and permanently damage America's reputation and its legitimacy as a serious country on the world stage. Everybody knew that America, like the real powers that be, understood that America was full of shit and it's a bullshit country. It's a country that's a marketing firm running a Ponzi scheme masquerading as a country. The global powers understood that, but they didn't care because there was a way to profit from it. But what the Trump administration has done between sanctions and tariffs and this spelunking that they've done against Iran and the Persian Gulf, no, we are not that anymore. So thank you, Trump, for ruining America's reputation overseas. And even though the magatoids won't see this, they'll see this as some sort of 5D chess being played out and some sort of great victory. I promise you it's not, and there's irreparable harm. So the damage has been done. We are heading for an economic decline, and I think that the oligarchs that run the show here in the United States understand that as well. It's what's happening on the other end of this. So we're on the trajectory, boys, and there's no pulling out. There's no pulling out.
Well, yeah, man. You can't be just a little bit pregnant, right?
No, exactly.
You're pregnant or you're not.
Exactly.
So you can't get uneffed. Interestingly enough, so we've talked enough publicly about the yen carry trade, which is, again, we're talking about all the things that are sort of blowing up, right? So yield curve control, I alluded to it earlier, and it has to do with the U.S. debt. We talked about U.S. debt. We talked about a few things. So when people don't trust your debt, you have to have higher yields to attract them to buy your debt. But then you have to be able to service that debt. And the United States is no longer productive. We're just a financial company. We don't really make, or at least, we still make things, but we're not increasing the amount of things that we make. If anything, that's decreasing. So in order to be able to service our debt, we're going to have to be extremely productive. We're going to have to start making things again. And it's just, I don't think this is going to happen. Not the only time I think that will in earnest happen is when everything falls apart.
Right.
And then our labor becomes like cheap and people become hungry and they're willing to work. And then by then, our robot's going to make everything. Like, we start to get into some very strange territories with all of this. So the real question I have is, will this be a slow move down over which we can paper and just kind of slowly descend so that the people don't feel the pain all at once? Or are we going to have an unforeseen event that causes a deeper and quicker crash? And no one knows that, right? Like this.
Yeah, no one knows. I mean, that's a good question, right? I mean, it goes on the fact that, I mean, the majority of the people with money and influence understand that the way to do this is to slow way down. But there's always that chance, man. I mean, we're, like you said, we're in the gray rhino, and we can wind up having a black swan. So that's the problem.
The gray rhinos are. We talked about that on the Rogue show with Gus yesterday. Right. I still haven't put that up, but gray rhino, basically, like, a black swan is an unexpected event that crashes everything quickly. A gray rhino is something that we all see happening, and most people who are not financially literate will just ignore it. Those of us who know about it and talk about it, and it's not a really big surprise. And so the fact that we're resorting to what is effectively yield curve control, which is like basically Keynesian socialist, like, just it's paying your mortgage with a credit card is all it really is. But we don't have to call it that because we're using the Treasury instead of the Fed. So it's not yield curve control. We're not doing what the Europeans are doing, which is, very untrue, but whatever, right? So the magatards can feel better about the fact that we are doing, socialist policy because we're not going to call it by the same name. And the fact that we're going there is interesting because we're at a time when the Japanese yen and the associated debt was getting out of control. And so their currency was becoming extremely devalued over there. So people were suffering from very high inflation in Japan, and their economy and their people were like suffering just to hold up the world's stock market, because the Japanese debt is a liquidity solution for the entire world's equities markets. So they had to protect their currency. But if all they do is just protect their currency, the entire world's stock market falls apart. If all they do is just hike their rates a couple times. So instead of hiking their rates, what the United States has decided to do in the Federal Reserve is to sell the euro and the European debt to buy Japanese debt. and keep and keep the game going for a while. And how long can that be? Are we blowing up the European markets? Well, if you listen to Marty Armstrong, who I like, Marty's kind of the same song over and over. Doesn't mean it's wrong, but like the United States with their debt, it's all federal. The Europeans don't have any consolidated debt. You have Spanish debt, you've got Italian debt, you've got Greek debt. So to be selling off their euro is very damaging to them because they are scrambling to like make it work, right? And they're supposed to be one of our like biggest allies. So this is just such a mess that we're pushing the Europeans underwater just to keep the Japanese afloat. Just so we can continue to run our stock market. Like this is we're I don't know how long this game can last like it is.
It can't, man. It can't last.
I think the only reason it is lasting is because the Chinese and the Russians don't want it to completely blow up all at once. I think they want an orderly retreat of the US empire. So I think that they will continue to allow, the US empire to paper over things unless the US does something really unwise in like Ukraine or Iran. Right. So I think Iran and Ukraine are held at bay by the fact that if the US or Israel do anything too extreme, China and Russia can just hit the button and the dollar, disappears into oblivion. So that's the chess game, right? That's the bulwark that the real manufacturers, in particular China, that's the loaded gun they have against the US's and the Western market's head, is that they can just be like, okay, we're done with you. I think there are even has there been any, China are very like diplomatic in ways that is underappreciated, right, V? Like the way that the Chinese government will diplomatically communicate, like they're very careful in what they say. Extremely. But haven't there been some warnings put against Israel if they do anything?
Yeah, that any sort of nuke that happens in the Middle East, they will get involved.
Yeah, you do.
Certain terms. That's the whole thing. That's why these retarded lawyers who run America, these are not engineer scientists, people with any sort of advanced degrees. These are people with America's run by morons with stupid, worthless degrees, morons with like psychology degrees and law degrees and political science degrees and all these think tanks and whatnot. These are all circle jerk parties. They have no understanding of supply chains or raw materials or hard sciences or engineering. They have no fucking clue. So to them, everything's a Hollywood movie. You're talking about a brainwashed country from the foundation to the topmost stone. So when you're dealing with people like within the leadership of this country, except for a handful of people, they're all idiots. So they think, this is the 1990s. China is some sort of sweatshop with rice paddies. They have no idea what they're dealing with. They have no idea what they're dealing with. They have no clue. So when China gives out a warning, and when you got American politicians, they're like, oh, yeah, we can use nukes. They don't understand. Once that genie's out of the bottle, you can't put it back in. You are talking about nuclear fallout that could affect the entire world.
Yep.
Okay? And that's a problem. And at that point, if you don't think there'll be a couple of hypersonics hitting Washington, D.C., you got another thing coming to you.
Yep. So, if China's issuing warnings, like, here's the reality of it. How long would it take for our military apparatus to simply dissipate if China were to withhold, strategic metals from the U.S.?
It's already happening. You got F-35s that are being shipped without ACER radars, right? And there's photos of F-35s with what is it called? Weight plates, and I have that F-35 with.
Yeah, they're putting literally 45-pound like plates instead of the ACER in the front, just to keep the balance of the plane, right?
Correct, exactly. And here it is. If nobody wants to, what we're seeing here. Here, man, put that up.
Yeah, I'm trying to. Oh, I got to get rid of my screen. Give me a second.
Mm-hmm.
There we are.
I'm sorry. I'll show this stuff. There you go. Bang. There
There
it
you
is.
Let me zoom in on it. Give me 1 second to kind of fix this up a little bit. Is this? Oh shit, that is not what I wanted to do. Or that. There we go. Might be better.
There you go.
This is what I wanted. Is there a way to zoom in on that? Like just hit that, like right click that picture. Like you can kind of, I guess it's good enough. You can see it. It looks like somebody is at, 24-hour fitness or something. Like,
Yeah, put a gym rack on there. It's the same. It's the same thing. It's wild, but that's
Dude,
what they're doing. And there's several of these photos circulating from news sources. Actually, so we won't have anything. We've already depleted all of our offensive and defensive missile stores. We won't have anything by this time next year. Absolutely nothing to build new stuff. Our stuff is expensive, complicated, don't work well, they constantly break, and they're not accurate, and they're very time-consuming to build. We could only build a limited amount. Just look at like shipbuilding, right? China produces more ships per month than the entire Western world can build in a year. Like it's combined. That's the amount of tonnage they can put out to ocean. It's incomprehensible. People talk about all the manufacturing powerhouse of China. Folks, you got to understand. When you go to college, you go to university, you got to study a real degree like supply chain management, right? There's a science to this. It's one of the most complicated, most intensive things you can do is setting up supply chains. And China has already done that. They've mastered it better than anyone. Okay, they're the most efficient supply chains on God's green earth. They're the factor of the world. We can't do that because why? We've outsourced our manufacturing overseas because we thought we're going to be a service-based economy and that we're going to be this paper powerhouse that everybody's going to be, pledging fealty to, and it's going to be perpetual forever. This is how lunatic people are that run this country, and we're not. And now so any stupid crap we do, idiots like Lindsey Graham constantly talking about nukes, Trump talking about nukes, the other morons talking about nukes. They have another thing coming to them.
Yeah, I think what's going to happen here is that, for example, we talked about this. When will the U.S. become more productive? It won't until it has no other choice. And I think it's going to be the same thing as when will the U.S. be able to retreat from like certain military obligations it has from contracts that are 50 and 80 years old when it has no other choice.
Lost every single military base in the Middle East at this point.
That's just it. So we can't.
Here's the funny thing, Cowboy. We're being resupplied. Our naval ships are in such disarray. They're being resupplied with supply ships that are coming from Diego Garcia. That's 2,000 miles away, and we only have 2 supply ships because in our infinite wisdom, the jackasses, the fucking uneducated idiots that run our country, thought we don't need a supply chains and supply ships. We don't need that. We'll just create military bases all over the world. No one's going to mess with us. And lo and behold, we wake up one day and none of those military bases exist. It's a joke, man.
Well, that's just it. So I think that I think things, okay. We were talking about this morning, you, me, Gus, our private, CJ Velas chat. It's like, it's just like a major corporation. So what they do is we all work for those. You push until things break because you don't know when things can break, right? Until they do. So what they're going to do is they're going to push until like the military breaks, or they'll push until the economy breaks. And then they'll know, okay, now not only do we know we have to change it, but we can change it because we have to change it. So I think a lot of this has to do with like obligations that were made decades and decades ago. And we have to continue to honor those obligations until we no longer can. At that point, we're going to look at it and say, hey, we got like 45-pound dumbbells in our jets. We don't have radar. Our ships are unsupplied. Our bases are blown up. Like, I'm sorry, we just can't. We can't help you. You know what I mean? And that's the only way we're going to get out of this is to get our asses kicked. It's a sad thing that we can't just diplomatically say, hey, you know what? We don't agree with this conflict. We don't agree with this. We don't agree with that. We're pulling out. Like, it's a sad thing. We can't just do that. It's like literally we have to go in, get our asses kicked, and then we're allowed to leave because we have no other choice. And I think that's going to happen militarily, economically. It's happening before our very eyes. And so as much as I don't want to see us lose fights, I don't want to see us lose fights. I want to see us not be in fights. But apparently the only way that happens is for us to lose the fight. So meantime, ideally, all of this kind of simmers down very soon, because economically, I think we're backed into a corner. And the only way that we're going to have not a catastrophic dump and just more of a slow dump that we can navigate is by getting out of this problem in the next like month or two in Iran. Like I don't see any other way that this will be okay.
Right. Exactly.
So that's the way I see it. That's the calculus, right? It's like we have to get our asses kicked so bad we have no other choice but to leave.
That's the only way. We've said this years ago. The Americans are going to learn when they get their shit pushed all the way in, and then they realize, wait a minute, the marketing plan that was the propaganda that's been fed to me my entire life from the 80s and 90s, that we're the democracy, and we are the country that kicks ass. A country that's never won a war, by the way. Then that scale, that delusion needs to go. We're not the biggest economy in the world. We are a fake bullshit country with a fake economy, a fake military. It's very, very fake, and everything's gay. That's all I got to say.
Well, yeah, it's kind of like the fraud thing. If we got rid of all the fraud, our economy would collapse.
100%.
That's why Elon got kicked out of Doge. It's just like, sorry, dude, first of all, how much of our GDP is social programs and like government programs?
God. Massive amount.
We print money out of thin air to fund government programs, and we call it economic activity.
Yep.
We're cannibalizing ourselves. But I think that everything in the world, I think internationally, it's all held up by that. So that's why Russia and China are allowing us to make the slow exit and to do the things that we're doing. And it's almost kind of like, and I know everybody is going to hate me for saying this, but it's almost like China is China knows we're our own worst enemy. And they're giving us a chance to not completely nuke ourselves.
Right.
And they have to do it with tough love by starving us of our ability to resupply our military, because they sell us all of the goods to do so.
It's wild.
It's wild.
Absolutely wild.
It's wild. So I think this is good enough for the public. Well, I'm going to go into the private live lab just so we can kind of go over the charts really quick. And we got Harley later today, right? V on Rogue. All right, let me just end the live lab. So, hey, everybody. Thanks for watching. Special edition of the extended live lab. We got a few minutes yet in the private live lab just to go over the charts that we've talked about. We got some big wins. I will share this one on the screen. Give me just a moment here. I will share this with the public because it's already, a win. Let's share screen. I got into this, I think it was yesterday. I'd have to look on the private live lab stuff, but big win on the USD CAD. And that I think I got into 2 days ago. Let's see, Wednesday. I think it was early yesterday that I entered this, and it's already doing great. It's a 2.67 risk to reward ratio. And I took half the profit off because that massive freaking Hitler candle that came down, that's just a funny term that we use. When you see the market do that, it's like when the market gives you a gift, you take it. So I took off half the profit and I put a tight stop on it, and it has continued down. So in the, if I just had held the entire position, and if it went to profit, it's like putting in $100 and taking out 267, and it probably is going to take the rest of today. So in, say, somewhere like 36 hours, more than tripling the money, right? So this is just the kind of stuff we do at Algo Factory. We also had a win with gold earlier in the week. And I had a similar play with silver, but it actually went deeper than I thought it would and got a stop out. But that's fine. You lose 100 here, and I made like 200 there. right? So it's like a net $100, and that's if you're putting in 100. I'm just using round numbers to keep everybody, to keep things very simple. So we're definitely, winning at Algo Factory. We win every week. No, we don't win every trade, but we're generally like, there's very few weeks that I'm like, I've lost money. It's just not. It happens though, but over the net, if you're taking careful trades, and you're not getting greedy, you're just following the rules, you could do this. Now, these are not, I share these trades before I get into them, but it isn't like I'm saying, hey, take my trades. Like, we're not like a signal service, but I do share what I'm doing, and everybody else does their own research and takes their own trades. Over to algofactory.tech, learn to trade like a hedge fund pro. Let me give the classic.
Join us or die.
Just kidding. You're not going to die. We love you.
You might die.
Well, everybody dies.
But not